Okay, let's go ahead and work on February payroll. Employee center. Now, time, appropriate time to fine tune. Now we're not going to enter time cards. Several reasons I'll explain in a second. But basically, you can see that these time cards are covering the second and then, I mean, the third and the fourth week of January. We actually covered it. We actually posted it in the previous episode of this series before billing for January. So we had to do it. So that will save us time. And here it is. And you can see that it's already been billed. But now, so we use those time cards for billing. Now we're going to also use it for payroll purposes. So here they are, these time cards that we already processed, right? Now, again, through December 31st, you can see that not only we processed them, we billed them, and now we get to essentially process the payroll. So let's go ahead and pay the employees. So that's going to be our payroll. Payroll date is February 5th, 2021, but you can see that it covers a period in January. With far as payroll goes, we did not accrue this liability. However, if we were a large employer and for GAAP purposes, we might have to accrue it. Again, beyond the subject of this simulation, perhaps somewhere in the future. So anyway, let's go ahead and pay employees. So pay period ends right here, 1/31/21. Check date, we have to fine tune this one a little bit. Right? We have to go back in time. Oops, a little too far. Here it is. All right, so that's going to be our check date. What do we pay? We have 3 employees. Here they are. See, again, you can see that because we're doing payroll manually, it's not entered here, but the taxes are not here. However, we will enter them because we have that information. So here it is, right? Again, this one is for Chisomo. So let's see, Chisomo's employer taxes, right again. So we can go ahead and enter those. Right. So we've entered employer taxes, right? And now we have to enter the employee taxes, and we holding. Okay, net pay matches. All right, everything is good. So we can go and save next. So again, debits and credits, behind this specific interface, what is happening? So again, very important to understand, but again, it will happen once we print the check. At this point, it hasn't happened, but nevertheless, what will happen once we pay the check? So again, In this specific instance, payroll account, right? Payroll account will be for once impacted immediately by the net check amount here. So that's going to be 267524 will be credited, right? What else is happening? Our liabilities will go up, our payroll liabilities, because we're withholding money from the employee and we have some payroll taxes as an employer we owe now. So 24,000, that's our payroll. 24,000. Our payroll liabilities will go up. And again, I'm just going to show it on this by what amount. So we can see that some of these things right here. All right, so that's one part of it, because again, that's the money that we as an employer owe, and then there's an employee portion, right? Because again, this is what we withheld. So again, that's one side of the equation, because again, what happens is our payroll bank account will go down as the employee gets and check cashes the check, and then our liabilities will go up because we took this money out from the employee paycheck and then some payroll taxes for the employer, but we haven't settled that yet. So let's document that. All right. So this is just for this specific employee, and I'm going to show it on this example, and then we'll show the overall impact. But these are the credit sides. Now, what is being debited? Something has to be debited, right? So one thing for sure we know is that our payroll expense, right? So let's see. All right, our payroll expense is 60 thousand, and that's going to be our gross right here, right? Right, so that's the wages. Again, we don't need to break out the withholdings because this amount here includes the net and the withholding. It's basically the sum of this two. No, the sum of this two. And then also we have the payroll tax expense, which in this situation we classify as a payroll expense. Yeah. So, I mean, we could, in this specific simulation, we actually put payroll taxes as payroll expense. We could break them out, and perhaps in the future months we should, because again, when we report for tax purposes, it's differently. So maybe we'll do that. But for now, again, we could just again dump it into payroll expense. So because that's what we have on our GL, I'm consulting my GL, and again, one thing you'll see as we advance with this simulation, which is very typical as you do bookkeeping, you kind of fine tune the GL. You see, oh, this works, this doesn't, let's adjust. You know, you do start with something more or less standard, but then each company has its own nuances. This is fairly standard. We just took something that was cookie cutter from QuickBooks and then we'll adjust it as we go. Anyway, in this instance, we're just adding the employer portion of taxes. So again, that's the sum of these things right here. So again, we know it's right here. The debits and credits equal each other, right? They have to. They have to. So again, what's happening here? This amount right here, it's a credit to 10,200, right? This amount right here is a debit to 66,000, which is our payroll expense. Total of this is also debit to this payroll expense. And then these two are liabilities, amount of money that we owe to the government for payroll taxes because we haven't paid it yet, right? And soon they will be reduced and the cash will be reduced. Anyway, that's just for this. Let's continue. Saving next. Next we have Labohang. Okay. Here, Social Security. There it is, right? Debits and credits. We know them behind this specific instance. Should we repeat them? Why not? Right? Let's do that. So again, right here. This is this is our total payroll expense for this specific. And again, we could break this one out, and maybe for the following months we will. For February, we're fine as it is. There it is, right? Debits and credits, and then what's happening here? That's our net check, right? And then basically the amount of money we owe to the government at this point. So it has two portions, right? It has the employer, and then it has the portion for the employee that we're holding. Right? Again, debits and credits equal each other. That's what we just demonstrated, right? And we can continue with our pay. Again, it will book it right after we complete this payroll run. If we don't complete it, none of this will take place, right? None of this will take place. But as soon as we finish it, all of this will post. And we'll show you in the aggregate how it posts. So again, let's continue. This is Kelly. Okay. Ta-da! Let's see what's off. Add a little bit of a hiccup right here. Yeah, we've had those before. Yeah, because again, our salary is calculated. So let's do this. 28, I need to add 3 cents. That's what there it is. Right, 3. I'll explain it in a second. There it is. All right. So what happens is there is, certain nuances to QuickBooks that it behaves oddly sometimes when you track time and at the same time you have salaried employees. Salaried employees imply that the rate is fixed, okay? And QuickBooks does the best job at it. However, it still uses hours, you can see, and it does this rate calculation. Why? God knows. I mean, again, QuickBooks was built by programmers and not bookkeepers. However, we can live with that. What we do is we make that adjustment to that net because ultimately this gross wages, we can't adjust it there because then it starts shifting everything up, but we can adjust it to other payroll items, and I call it salary rounding adjustment. So if I see that this is 28 cents and this is 31, right? So I need to bring this one up by 3 cents. And that's what I did here, and then my net is accurate. Would I do it in real life? Maybe, maybe not. Depends on how much of a stickler everybody is. But technically, if we do have fixed wage, we should be doing that. So anyway, this is what it is. Debits and credits behind it, right? What's happening? Bank account will be impacted by this amount. 4,718.77, right? That's our net pay. All right. What else is happening? Our liabilities will go up, right? So we know that 476.92 plus 111.54, right? So that's this portion. Because now we owe that money. The moment you run payroll, basically you owe that money to the government. Then also, we withheld some money from our employee right here. We owe that too. We haven't paid it. We took it from the employee because, the net check is less than what their gross earnings are, right? So we took that money at 8 hours. So we owe it to the government on behalf of the employee. That's our credit side. What's happening as far as the payroll expense? Well, that's the gross wage right here, plus 3 cents, right? So 7,692.28 plus 0.03 cents. That's that, right? That's our gross wages. And what else? That's our payroll taxes. Ta-da, debits and credits equal each other. And they have to. So now you see the debits and credits behind this payroll interface. You guys viewers been asking for it for a long time. What are the debits and credits behind it? Now you know them. Now you know. Okay. Okay, save and close. See, now it all filled out right here. We can start creating checks. But we can also take a look at the debits and credits behind it once we create it. So let's go ahead and clear. And that's our overall impact. So gross pay right here, deductions, net pay. Net pay will impact our bank account. So that's going to be 12,236 and 78. That's the overall. So we did individual ones, and that's the overall. There it is. What else is happening? The amount of money we go owe for taxes, right? So there it is. That's the employee taxes, and that's the employer taxes. So first this portion. We will have to, for time being, we will owe both. Okay? Because we haven't paid taxes yet. And the employer portion right here. All right, payroll expense. That's the gross pay right here. And the employer taxes right here. See, it equals. Balances out debits and credits equal to each other, and you know exactly where they are, right? This is debit to 66,000, and again, right now payroll expense includes both payroll wages and the payroll taxes, employer portion as well. We can break it out going forward. We'll show that we did, and we will make adjustments for some of our. We can make journal entries. That would be a great example. We'll make those adjustments. As a result, we'll go through March doing that, and then we'll adjust for future quarters. Here it is, right? Anyway, debits and credits, right? Let's continue. This amount right here, it's a debit to 66,000, but it's also a credit to 24,000 because we haven't paid it, so we owe that money to the government. This amount, the withholding, is also a credit to 24,000 because it's a payroll liability, right? And then this amount is what's going to impact our bank account right here. Even though the balance is low, we'll find it right in time before everything starts clearing. But this amount is a credit to 10,200 to our payroll account. Great checks. Checks. Let's take a look. Yep. See, the net looks good. Net looks good. Net looks good. First check is going to be 4. Yeah, we'll see how they align. We can change check numbers. We can renumber. It's very easy. Printing. So the numbering kind of didn't work out, but we'll go in and renumber. So okay, yes, they printed correctly. Good. Let's just go ahead and write checks. That's our payroll. Okay. So let's see. So our payroll date was 2/5. All right, so here it is. And this is our check numbers. So Chizoma's check was 6. Close, yes. Just. So that was Chizoma. 5 was Libohang. Libohang was 4. Libohang, and then Reyes 5. So 4. So it's 5. That's how you make corrections. Technical issue has nothing to do with anything. But here we have it. Reyes is 5. Labahang is 4 and Chizoma is 6. Done. right? So we just finished up. Do you want to memorize it now? We just finished up our payroll, right? So this was the payroll that we just did. Requires about $21,000 to fund it. So that's what we'll do next. We need to transfer this money, so let's go ahead and do that. Okay. 2521, perfect. We're going to transfer from general to payroll. Simple as that. Amount transfer 20,898. Okay, debits and credits. We know them and they're giving them away right here. Two accounts are being impacted, both are assets. One asset is going up, the other asset is going down. Which asset is going up? Payroll account. We're funding it. $20,898 is going to our payroll account. It is going up, thus it is debited. It is coming out of our general account, thus it has to be credited. Da-da, there it is, debits and credits, right? So this amount right here, it is a debit to account 10,200, and it is a credit to account 10,100. Okay, save and close. Okay, let's go ahead and pay our payroll taxes now. Remember that, we booked into that account 24,000 payroll liabilities, right? So that was 24,000. Now we need to reduce that, right? So let's go ahead and do that. Again, employees, payroll taxes, payroll liabilities. Okay, let's stick to our date. The date we did our payroll, 2/5. It's kind of, again, depending on the amount of money you owe to the government, that dictates your deposit schedule. However, I do advise people to just, taxpayers, to pay it as you go. This way you avoid penalties, and payroll tax penalties are very severe, so it's something that I wouldn't want to incur. Anyway, income tax, here we go. Disability, unemployment, TTT, yes, 1,915. So, all right, here it is. Okay, so what is happening here? Well, we're reducing liability. We're not touching the expense account. We touched that, remember, during the time when we booked the payroll itself. Review liability. All right, here we go. Let's go ahead and pay it and then reflect what's happening. So we're creating this check. Okay, again, we could essentially do it as an ACH right here. Let's see, what did we do last time? Payment. I can just use this payment number as our memo. Okay, and then this would be, we can use this last four. Okay, 70, all right, here it is. All right, so let's reflect what's happening. So our liabilities are being reduced. All right, liabilities are reduced when what? When debited. Straightforward. So let's show those. Here they are. Remember, first we increased them when we ran payroll. Now we're reducing them. Oops. Whoa. How we're paying those liabilities? We're paying it using our payroll account. Right? Payroll account is an asset. Assets are reduced when they're credited. So here it is. Credits and debits are in balance right here. These amounts right here, they're debits to account 24,000. Remember, we're not touching expense accounts at this point. We touched that when we did the payroll. Now we're just taking that liability that we incurred and we're reducing it. And we reduce liability when we debit it. And we reduce it by paying out of our payroll account, which is account 10,200, and we credit it because, again, bank account is an asset. Assets are reduced when credited, right? So here it is. All good. We're going to go ahead and pay this. Next one, we're going to pay our federal taxes. Similar thing, right? There it is. All right. And we're going to make sure the date is correct. 6,745. That's what we have. Let's reflect it right here. Here we have quite a few more. Let's show it, right? Oh, running out of space, right? Not a big deal. With debits and credits, doesn't matter where you put them as long as you put them. Voila, debits and credits are in balance. That's what we're going for, right? Again, each one of these amounts right here, each one of these amounts is a debit to account 24,000 payroll liabilities. We're reducing payroll liabilities, right? When we ran payroll, 24,000 went up because we credited it at that time. Liabilities are increased when credited. Now that we're paying it, because we basically had liability because of the employer taxes that we incurred as an employer, and also we withheld some money from employees' paychecks, and we have to submit that money to the government. So those liabilities went up. Now that we're paying it to the government, all right, we're reducing it. We reduce it by debiting account 24,000, and we take the money out of our bank account, that is payroll bank account, 10,200, and we credit it because it's an asset. Assets are reduced when credited. So here it is. Let's create that check. There it is. Let's just put those last four. Okay, all good. Can probably use this number. Huh? Save and close. Okay, so let's just take a quick look. That's our general. I just want to look at my payroll account. State. So we're going to change this to S. State. Yes, and this is federal. Okay. Doesn't change debits and credits. I'm just doing it for our own purposes. All right, so that concludes processing our first payroll for February. Right? Again, what we did is we used the information from time cards to prepare our payroll, to essentially explain how that impacts debits and credits, and how later we funded the payroll account and pay payroll taxes. Right? Again, at the time when we enter time cards, doesn't impact debits and credits, but as we start processing it into, accounting documents, it does. All right, next we have our second payroll for February that we will process now. Again, these are the time cards. Employee Center, we will not go through the process of entering time cards just simply because, we already demonstrated it. It doesn't have any debits and credits value in it. And we basically already uploaded it into the system. And therefore we'll just show you that it's there. Okay, give me a second. So here it is, right? Here, that time card that you see on the screen. Here's the next one, right? There it is. And we have it for the other employees as well. So here you can take a look, right? We already pre-processed it, went through it. Now let's go ahead and again go through payroll. Second payroll of February. It would take place on February 9th and 19th. That would be the last payroll of February. There was two payrolls in February, right? Because we do payroll every 2 weeks. So let's go ahead and pay employees again. So period and it's 19th. Right. This case is so no, period date is 14th. Okay, payroll account, and we have Shizan. We have the again, something that we've done, but let's just solidify our knowledge. So here we have the usual suspects. Let's go through debits and credits. So Chisamo, Social Security, 2012. Right. So you can see that these amounts that we just paid the liability, now we're increasing the liability back up, right? And so all of these are going to, you know, credit our 24,000 account payroll liability, and it will go up. At that point, again, this and this combined will increase our payroll expense, all right? And our payroll expense will go up. Yeah, so account 66,000 will go up by these two numbers, sum of this and this, right? And then it will be funded by this money out of our bank account, right? And this will be going towards liability, and this will be going towards liability, right? Just like we just showed, and then we'll pay it down. So let's cover it. All right, so we have it. Net is correct. All is good. Again, let's just show it for completeness. Previously, we just paid down payroll liabilities by debiting it. Now we're going to increase it by crediting. What are we putting there? We're putting this portion, the employer portion that we incurred. Right? What else we're putting? We're putting the money we withheld from the employee. Right? That's right here. All right? So that's where our liability. What else? We're going to take money out of our payroll account. That's the check to the employee, right? And that's right here, the net. So that's how much money is going to get out, essentially as far as the funding. Now, all of it will be in our case is going to go towards payroll expense, and like we said, for following months we might break it up, but into payroll tax. All right, so what's going there? So that's your wages, employer taxes, and it should equal to the other side, to the credits we have. It doesn't mean I made a mistake. It does. Okay, so now you see debits and credits behind this interface. All right, let's go ahead and save in next. Next we have level hang. Okay, level hang social security right here. All right, so right here. And then the employer, the employee portion right here. So see again, right here we're off from our gross wages. You've seen that before, so we have to make that adjustment. Why do we have that thing? Well, the reason we have those pennies is because QuickBooks again does a good job, but for whatever reason we don't entirely understand, right? It prorates things into the rates here, and we end up with rounding errors that we have to correct for right here and other payroll items. So that again, our gross right here, our gross looks, what it is expected to be, and for salaried employees, it's a flat rate, right? It would be unusual to have that fluctuation. Anyway, let's enter the rest of it. All right. Here it is, our net pay matches. All right, so there it is. There it is. Again, this is from the previous one. Let me just clear it out so it doesn't confuse you. But, again, you know that these amounts right here, they increase our payroll liability. This increases our payroll liability. This increases our payroll expense. And this increases our payroll expense. That's it. Straightforward. Next one. This one is for Chris. Let's see, same thing again. It just, we have to adjust. That's fine. By 1 penny, not a big deal, to bring it to where our gross matches. All right. That's net matches, and then we have this right here. There it is. All right. So this is our third one, and we'll cover debits and credits for the whole transaction in the next one. Save and close. So there it is. What's happening? Well, again, our bank account, payroll bank account, will be reduced by at first because again, right now we're not paying the payroll taxes yet. We owe them, right? So we're only reducing our payroll bank account by the net pay, which is right here. And again, until we execute and print paychecks, it's not gonna book that yet. So only after we complete the cycle, right? All those debits and credits that we covered, only then they'll take place. All right, so we have that. What else is payroll expense? That goes up by gross pay, 19,144.62. And again, this is payroll expense, their combined wages and taxes. We can break it out going forward, and I would say starting second quarter, first quarter, we'll finish this one. Then we'll make adjustment and adjusting journal entries just so that, again, for completeness to show. Okay, what's the second part of the payroll expense? That's the employer taxes right here. 146456, right? Right. What else? We borrowed, right? Payroll liabilities 24,000. Payroll liabilities went up by what? The taxes we withheld from the employees and our portion of the payroll taxes. Payroll taxes, right? Yeah. Voila, debits and credits equal each other, right? Again, somebody would say, well, I don't see debits and credits behind this interface. They are there. They're there. And we just demonstrated to you what they are. All right, create paychecks. All right, here we are, our 3 employees. Our first check is 7. That's correct. Again, the order probably will be off a little bit, but that's fine. Payroll bank account. Yep, good. So you see this 12,000 right here? Yeah, it will be credited to this account. Okay. So again, the order was a little bit off. Here we have Le Bahang had 7. Riz had 8. So we're gonna rename them, but that's okay. Close, everything printed fine. So what's the easiest way to make those corrections? My favorite way is to go to that date. Okay, and let's look for, here it is, 107. 107 is Chizoma, and it's 9. So we're gonna change that to 9. Save and close, yes. Keep number, we're gonna change it. So we changed Chizoma. Next one is Reyes was 8. Okay, Chizoma was 9. And was 7. And close, yes. And then we just have Reyes. Reyes. Chizoma, we just need to find Reyes. So that's in case you need to make those corrections. Let's say you printed, the number doesn't match, now you know how to do it. It has nothing to do with debits and credits. But, now you know. Don't display that. That's it. We finished booking our payroll, right? Now we need to fund it because, we basically going to have those checks clear in a little bit. We have to pay payroll liabilities. We need to transfer money. So here it is. Banking, transfer funds, general, from general to payroll account. Debits and credits behind it. By now you probably know. What's going up? Payroll account is going up. The accounts assets go up when debited. What else is happening? We're taking money out of our general account. That one will be reduced by the same amount. There it is. This amount right here, it is a credit to account 10,100, and it is a debit to account 10,200. Save and close. All right. Next, we're going to pay our payroll taxes, the one that we just incurred. This is our state. All right, $1,802.36. That is correct. All right, again, the money will be coming out of our payroll account, so that's an asset that will be reduced. To be reduced, it has to be credited. What else is happening? Our payroll liabilities will be reduced. Remember, we put money in there, it was going out, now it will be reduced. Payroll liabilities go down when they're debited. All right, debits and credits are in balance. Well, actually, let's do a little bit more detailed for kicks and giggles. That's some more detail, right? So this amount and this amount, the debits to account 24,000, right? And this amount right here is a credit to our account 10,200. Let's go ahead and create this check. Here it is. This is the amount. We can convert it to ACH since it will be an ACH. But again, QuickBooks forces us to use the check format if we're not using their support for payroll, which is fine. Again, there's so many ways to bypass it. Again, you can see debits and credits right here. So each one of this is what? It is a debit. It's a debit to account 24,000, even though you don't see it right here. And then this amount right here, it's a credit to account 10,200, and you see that right here. So save and close. We have changed. Yes. Next payment we have to make is for our federal taxes. All right. Okay. All right. Federal. 1,000. Let's see what else. Federal withholding. Social Security, 6,570.04. That's what we have. Awesome. All right. So again, what's going to happen? Well, this amount is going to come out from our bank account. We know this much. And then each one of those amounts on the debit side, so right here, they will be reducing the liability, payroll liability. So just show it for completeness. There it is. This is our transaction depicted right here. Once we create it, it will take a form of a check, right? There it is, right? Voila, right? So again, these amounts, they're right here. They're debits to account 24,000 payroll liabilities. Liabilities are reduced when debited. What happens is those liabilities that we just incurred when we ran payroll, we're now paying them down. We're sending that money to the government, our liabilities goes down, but the balance in our bank account is also reduced because that's how we're paying it. And therefore, bank account being an asset, it is credited for that amount. And that concludes processing payroll for February.